Taiwanese index is down around 1%.
They will have a controlling stake in a company which is engaged in the business of financing.
At the moment, there's no risk for Europe's energy security.
I think for me, the bigger worry is what's happening to the bank Nifty.
Nifty is now down almost 140 points.
In June, somewhere the market was assuming the peak would be somewhere about 3.5%. Now, with that expectation, has gone to more like 4.75%. It will stay there for a longish period of time.
On the 26th of September board meet, the independent directors of Indus Tower have taken a very strong view about the mounting dues from Vodafone Idea.
They have acquired Curatio Healthcare for around 2,000 odd crores. Currently, we're down about 0.5% on the benchmark indices.
Tata Tiago EV will also become the first premium hatchback to be offered as an EV in India.
What dealers tell us is that there is a persistent dollar offering, which they are guessing is from the Reserve Bank, and they are guessing that because of this offer, 81.94 is not getting crossed.
Starting October, merchants will no longer be allowed to store customers' card data as the new card-on-file tokenization guidelines come into force.
Mid-cap index is the one that is shining in trade today. That one is up 116 points.
Good afternoon and welcome to Closing Bell. I am Anuj, with me, Prashant and Nigel, and once again a market in which just when you thought the market's putting some kind of a recovery, there's again selling pressure, and the sell-on rally texture of the market so pronounced. The 200-day moving average, which was a support for the market, is now acting as resistance. Today the market, the recovery absolutely ran into that at 17,000, roughly thereabout. And more importantly, for the bank Nifty, which is now down 300 points, advanced decline slightly in favor of declines, though there's been some stability. But financials clearly coming under a lot of selling pressure, and Reliance hasn't helped the market. But names like HDFC Twins, HDFC triplets now actually, and some of the other stocks where you've seen some selling pressure, likes of Axis Bank and Kotak, just tell you the kind of market that we are in, and one wonders if again today there's going to be a large FISL number. Prashant, Nigel, hi, good afternoon.
Anuj, hi, Nigel, hi. So the situation has not changed. I mean, and it stays firmly lower. 85 lower, as we just pointed out, under the 17,000 figure. U.S. futures are down, and bulk of what's happening globally doesn't provide very much comfort as well. I mean, actually, it is the global setup which does not provide comfort at all, and there is so much which is happening. The big thing, if you wanted to pick one thing from the tens of indicators, it would be the fact that U.S. yields are, the 10-year itself is inching closer to 4%. The 2-year, of course, is past 4%, comfortably past 4%. And that is the number one thing. There is a general overall repricing happening, repricing of the risk-free rate happening globally. And it's showing up in the most prominent fashion in the most powerful most influential market, that is the U.S. market, U.S. bond market. So that is putting pressure everywhere else. The dollar, of course, is the other one at number 2 position, I would say, which is at 114 plus. Again, providing little by way of comfort. So those are the pain points from a global perspective. And by the way, all of this is happening even as, there is this anticipated recession. If you looked at high frequency data out of the US, you would say things are just fine. And you'd be not wrong in imagining that. But, I mean, it is the market's expectation that all these tightening measures will lead to a slowdown recession at some point in time. And you've got to deal with that as well at some point as a consequence of all that is happening. So the underlying drivers have not changed. Here we've got some selling pressure as we start today's edition of Closing Bell this Wednesday. Nigel, hi.
Well, hi. In the last few minutes, you've seen an additional drawdown on the Nifty itself because two heavyweights, one is Reliance Industries and ITC. Both of them have taken a bit of a leg down. Remember, both of them together are a large weight on the index, and both of them moving lower. That's what's put some pressure. And even Axis Bank, remember, close to 0.5% in terms of equity did change hands just a few minutes ago. So that stock as well now dragging low. In fact, at the low point of the day, down 2.5%. Well, plenty to talk about. First up, let's run you through what we have lined up on the show for you. Muthoot Finance is buzzing in trade, up close to around 8% in the last 2 sessions. We'll get you details later on the show. We'll talk all things market and discuss the volatility in trade with our market experts. We'll have Prakash Diwan on the fundamentals, and Mitesh Thakkar will be joining in with his analysis on the technical side. Not just that, our alpha manager of the day, Nilotpal Sahai of HSBC Global AMC, will be joining in with his portfolio bets and his view on the markets.
Okay, but first up, as always, we discuss the last hour calls. As we speak, the Bank Nifty is making a move towards the lowest point of the day. I think, in the first hour, the low was 37,825. We are at 38,000 now, so about 175 points away from there, but getting there. Mitesh, good afternoon. So your thoughts on how the index has panned out? Once again, the rally has been sold into, the intraday rally, that is. So how to approach it now, and your stock calls?
Good afternoon. I think you're right. See, one is that the structure is weak, so I think you will see strong supply emerge at higher levels. The best case scenario in the short term till we get a reversal, I think is around 17,200, 17,240 zone. So I think that's the best case scenario. But the other thing is that we have become oversold with the last 4 or 5 days of fall. So you'll keep getting some short covering bouts at lower levels. I think for the time being, you might want to look at a range of about 16,750 to about 16,250 broadly, 500 point kind of a range. And but try to be taking more on the short side as the bounce back happens. So I think that's the approach which you're taking, because my overall belief is that the short-term chart structure has clearly been damaged, and the supply pressure will be higher at or stronger at higher levels. So we'll be trading with more of short buys, closer to about 17,200, explore aggressive shorting opportunities either by buying put options or selling futures. On the stock side, Chambal Fertilizer is a sell. That's the stock which is broken down. So keep a stop at about 314. Look for targets of 295. And DVs, I've been recommending pharma as one of the long, sectors which traders can look at possibly taking long positions. So DVs is the latest stock to give a breakout. That's a buy. Keep a stop at about levels of 36.64 and look at a target of around 3,800.
Thanks very much, Mitesh. Appreciate you sort of running us through those trading ideas, trading strategies. Well, Prakash Devan is now joining us. It's a 3-digit fall now, 100 plus points on the Nifty, 16,908 is where we are at. So, I mean, everything is coming off just by a little bit, some more, some less, but everything is seeing gains taken off by different degrees. Canfin Homes is one of those names which is now just, I mean, it was up 4% earlier, about half an hour, 40 minutes back. It's just got a 0.25% at the risk of falling into the red. Prakash, good afternoon. Good to have you with us here. There was a conference call, and Abhishek will join us in just a bit to outline what was said. It was addressed by the outgoing MD, Mr. Korsky, which kind of puts a question mark on the whole thing, right? What the market is worried about, why is Mr. Korsky going? There have been no real clear, straightforward answers to it. And we've got commentary from the outgoing MD himself saying that, there are no real problems, and the numbers with regards to the wrongdoings remain very, very limited and small. What's your sense? Stocks corrected 30% very quickly.
Yeah, good afternoon, Prashant. Yeah, so I think the screen tells you the befuddlement or the confusion that's kind of got added to, after this call. The call was anticipated to clarify things and, get some sort of a direction for people to take in terms of whether to buy or to get out of it. But it kind of, because of the confusion, you'll probably see a little bit of conviction coming off. And I would be surprised if, the interpretation is that there's something which is still wrong and we haven't been able to figure that out, given the fact that the gentleman who is moving out himself is explaining or trying to validate this situation. So, I think it is a little bit of a issue which will take some time to resolve, and the damage will be felt on the screen. But fundamentally, whatever so-called wrongdoing that we had heard of a few months back, and then kind of nothing much came out of it, probably seems to have got digested, if not glossed over, by the market, and that's precisely the reason why, as a sector, as a pocket, since this is still promising, as a player, there is strength. People might not want to kind of run away from the counter so easily. Where the fresh money comes in, people add to position. That will, of course, depend on how finally things get resolved. And as a matter of disclosure, I have been holding this stock in my portfolio on a long-term basis. But I don't find faults with the business model as such. So if there has been some issue, it could probably be not as significant to damage the overall growth trajectory of the business itself.
All right. So, Prakash, as of now, you believe maybe, the stock could look a little bit attractive at these levels. It's lost close to 2,200 crores of market capitalization from the day that CE resignation came about. So, risk reward could favor you at around this 460 odd mark?
Nigel, it does, so that's what I'm trying to explain, that if whatever comes out finally and you are convinced that, it's not something which is going to impact the business, it's a price, it's a screen that's kind of got damaged, but not necessarily the business model.
Okay, all right, Prakash. Thanks for your view on that. In fact, Abhishek is standing by. He's going to run us through what all the management had to say on that conference call. Abhishek.
Well, Nigel, as you mentioned, Canfin Homes did have a con call earlier today, wherein they said that there is no linkage between, identification of frauds and the resignation of MD and CEO. So they have initiated the hiring process for the new MD and CEO from the market. So they are looking at both PSU entities as well as private entities. So total fraud amount was around 6 crores at gross level, and the net is around 3 crore or even less. Remember that in March, they had said that the fraud amount is a little under 4 crore, which has now increased to around 6 crores or even more. So there is also number of clusters which have increased to 14 versus 3. That is their penetration. And the real estate market, they spoke about that, another 5 to 6 years of good growth they can see in the real estate market. So they would continue to focus on the southern market in India and then move towards the northern market. They have reiterated their spread and net interest margin guidance of 2.4% and 3%. Now, I remember that earlier the management had mentioned that they are looking at a NIM of 3.4 to 3.5. So there is a decline in the guidance on net interest margin front. Credit cost guidance for the upcoming quarters will be around 11 to 14 basis points per quarter. And the increase in credit cost would only depend on the bucket of NPA moves that they see. Back to you.
Abhishek, thanks a lot for that. The bank Nifty is now approaching almost a 400-point fall. The mid-cap index also is in the red. Axis, Axis is the one which really stands out. That's made a move towards the lows. State Bank of India is the other one. Now, SBI, in fact, has corrected about 8% in line with the bank Nifty. I mean, the bank Nifty and SBI have moved in tandem. Both made all-time highs, and both have corrected about roughly 7 to 8%. Prakash, good afternoon. Re-entry opportunity in SBI, or do you think it needs to correct more?
Good afternoon, Anuj. It's so extremely difficult to figure out whether this is an interim bottom at 530. But, people were willing to bet on it even at 575, 580 zone, right? So, because the overall structural this thing for SBI salience doesn't really go away. What's probably happening is, we have monthly expiry tomorrow. We've got a lot of this whole, confusion in terms of what happens if the RBI were to continue doing this rate hikes and how hawkish they could kind of sound. So, in anticipation of that, I'm not surprised there's a little bit of easing off of positions. But fundamentally, I don't see any reason why the growth in SBI would be doubted at, just because the stocks moved down 7-8%. So yes, certainly a good entry point, because if you look at the long term, there is definitely ample headroom for it to grow on all counts, including all those optionalities in the new areas that they are focusing on as a business that's actually setting trends in new areas, not just following the other leaders or other players. So I'm quite positive on it. Every dip would be an opportunity to add, yeah.
Every dip is an opportunity to add. What about these smaller housing finance companies? I don't know if you track there's Aptus, there's Home First. Aptus, for example, is corrected from 400 to 300. Home First has come off a little bit as well. Would you look to add any of these?
So yeah, Prashant. So, interestingly, people are getting a bit mixed up with when you especially start positioning these companies into portfolios. There's a marked difference between low cost housing and low ticket housing. So what happens is that low cost housing, which is affordable housing segment, it has its own share of issues in terms of the kind of growth that you can do. Scalability is a big problem. Customer acquisition is not always the best in terms of efficiency levels. Whereas low ticket housing, which is you partly fund part of a larger, value asset. That is something which I think is a very positive growth area. And from that, if you see some of these players like Awas and all have done dramatically well, especially in terms of, the kind of efficiencies they have built into their systems. So one of the best adaptation of technology and CRM is at play in the case of Awas. It's of course, slightly more expensive from a valuation perspective. It's always been traditionally high value in terms of the P multiples that it gets or the price to book it gets. But I believe there's a huge potential in this segment. It's a little bit of a reset that's underway right now. So, and as real estate also starts scaling up in certain pockets, particularly tier 2, tier 3 India, you will see a lot of these companies start getting traction. So quite positive on it. But I would stick to some proven models like Awas, as I said. Aptus, of course, is also done well. This dip that you referred to is probably a little bit of a exuberance getting off the table, and which means that much more realistic value that you derive when you buy these shares now after a little bit of correction.
Prakash, I know you track the auto space very, very closely, and you know my love for bikes, and I'm just waiting for the end of this monsoon to jump back onto the Royal Enfield. But Eicher Motors, well, the stock has been moving pretty well. I'm looking at a sales note, and they say that maybe for September, we'll see the highest monthly sales number, and also the initial response to the Hunter 350cc, a relatively smaller bike when you have the Machismo of the world and even the Interceptors of the world coming out. But the response has been good. What's your view on the stock from here on? It's up close to around 1.5%, and they had some supply side issues which appear to be resolving as well. Your take?
So, Nigel, I know how you have written this bike, and not just the stock, all your active years. But it's a question of what the company does to position itself in this competitive landscape that it stands in. There was a time when the competition was fairly slow in introducing newer models that would compete. But the moment Bajaj set the cat amongst the pigeons by going into higher CC, higher capacity bikes and the high-end bikes, there was a little bit of a shake-off in terms of the complacency that was building into Eicher. Now, with the launch of some of these newer products that they have, and I wouldn't be surprised if they have some of the the other models like the Cafe Racers and all also starting to come into the limelight. There will be gaps that will be filled. So the product mix has been the weakness, and that's exactly what they're trying to address. The supply side issue on critical components, in fact, they're the least impacted because their bikes do not carry so much of electronic, telematics as much as some of the other bikes do. So that's been an advantage of sorts, and I think it will continue. The festive season is going to be a bumper for sure for these kind of bikes, which are aspirational as well. And it will definitely help them increase top line. I'm not too sure how soon the margin profile will improve. It would probably take 2 more quarters to kind of come up on a decent way, because that's also been struggling. But yes, I'm quite positive on the stock, but it would be bought on dips ideally, because given the fact that it's run up much faster than other two-wheeler stocks in the last 3-4 months.
Okay, the market's taken another leg down, by the way, and the Nifty is back below now 6,900. The morning low was 16,825, so getting within 60 points of that intraday low. And I think on the Bank Nifty now we are within 90 points of intraday lows. So clearly the market's seeing a lot of selling pressure. I mean, just look at some of these stocks now. Hindalco, this really has been the big casualty of this month. 18% down. I think the trigger perhaps was when Alcoa announced, last week or just before that. About some problems, and Tata Motors is the other one where we have seen month to date big decline, and of course in the last few minutes there's been selling across the board. Adani Ports stands out. In fact, a lot of these Adani Group stocks have seen some unwinding. ICICI Bank is just turning in the red, so even some of the stronger stocks are making a bit of a move down. So clearly the selling is getting a bit more pronounced.
I mean, it is it's not taking very much for the market to kind of take take another leg lower, is it? Market breadth also is completely flipped. I mean, it was positive for bulk of the session, and it's now crossed over. 1,300 stocks are lower, and about 815 stocks are down at this point in time. Let's address another story, and this is coming in from Delhi. The government has extended the Pradhan Mantri Garib Kalyan Anna Yojana, or the PMGKAY scheme, for another 3 months. CNBC-TV18 learns from sources that concerned about fiscal implications, the Finance Ministry opposed extension of the free food scheme. Timsy is here with all the background and details. Timsy.
Well, yes, that's right. When it comes to the extension of the Pradhan Mantri Garib Kalyan Anna Yojana, or the free food scheme that the government had launched during pandemic, especially for migrant laborers, to help them sustain their livelihood. Well, what we are given to understand, since 30th September was the last date for the 6th phase of this scheme to get expired, and today we understand that Cabinet has given another 3-month extension. Just to give a background as to what happened behind the scenes for this particular decision to come in. What we are given to understand from sources is that on 26 September, Finance Ministry wrote a letter to Food Ministry saying that extending free food scheme would have a lot of adverse impact. Also, they had written that the proposal submitted by the Food Ministry for extension has a fiscal implication of about 44,762 crore rupees, and there is fiscal pressure due to Russia-Ukraine war, effect on fuel prices and rise in other subsidies, which should be kept in mind. And I quote again, pandemic has abated considerably. Distress for which relief was given does not appear to be prevalent. So these were the reasons that were cited by Finance Ministry to the Food Ministry on their proposal for extension. And they also said that continuation of the scheme over a long period of time may give an impression that it is permanent and indefinite continuation that the government is going to do. So those who are actual beneficiaries will also have a mindset against which Finance Ministry opposed that this extension should not be there apart from the fiscal implications. And yes, not to forget, they also mentioned that continuation of the scheme may make it difficult to stop, hence termination of the scheme is advisable. So there's a possibility, is what they also added, that there's a possibility that there may not be adequate food grains to continue such distribution indefinitely given the global environment, and if the scheme is continued, a reduction in quantity may at least be carried out. So that was the word of caution that the Finance Ministry, to be precise, Department of Expenditure, had given when they were asked for an extension of the scheme and what could be the fiscal implications when they wrote back to the Food Ministry. But as we say right now, we are expecting an announcement soon by the Cabinet press conference, and as we can see, despite fiscal pressures, the political call prevailed, and the scheme seems to have got an extension for 3 months.
Okay, all right. Thanks a lot for that. Timsi, by the way, the markets have taken another leg down, and the breadth of the markets as well, is firmly in favor of the declining stocks. Pull up just 2-3 stocks. JK Cement, remember the stock had a good run from the recent lows. From the top again, it's seen some selling. In the last 7 days, all these stocks that ran up, they are seeing a lot of selling. Atul Limited, that's the other stock that's getting clonked actually. And Hindustan Copper as well. Now it's moved to the low point of the day. So clearly quite a bit of profit taking in the broader markets. For the time being, slip into a short break. On the other side, we'll be joined by Alpha Manager of the Day, Nilotpal Sahai of HSBC Global AMC will be joining in. Welcome back. Well, a few stocks that are still holding in the green is the likes of Dixon. They had a conversation with Jefferies, I think, and there was some positive commentary that did come out of there. They're looking at scaling up their margins from here on as well. Though they said on the LED side of business, well, there is a bit of an issue, but otherwise the mobile part of their business, well, that's scaling off quite a bit. Muthoot Finance, though, that's the stock that's doing very well in otherwise weak market. Abhishek joins us to run us through what Kotak Securities' view on the stock is. Abhishek?
Well, over the last 2 days, Muthoot Finance is up anywhere between 8 to 10%. Yesterday's turnover was around 2,355 crore, the highest that you are seeing over the last 1 month or even a little more. So Tuesday's delivery percentage volume was around 57.5%. That's on the technical side of the things. We also have Kotak Securities writing on Muthoot Finance. They have changed the recommendation to buy from ad and increase the target price to 1240 from 1200 that they had earlier. They they say that the domestic gold prices are up 8.5%, while INR has depreciated a little more than 7%. So depreciation in INR is actually supporting the gold prices, and the competition pressure has increased given the fact that, Muthoot Finance has now done away with the teaser loans. Remember that, Muthoot Finance has launched teaser loans when banks were aggressive in the market. So upside risks they see to the loan growth estimate of 10% for FY23 and around 14 to 15% that they have estimated over the next 2 years. So they remain assertive on the business model, which can deliver an ROE of 20%. So both in terms of price to earnings as well as price to book value, the valuations are undemanding. Back to you.
Okay, Abhishek, thanks a lot for that. Well, the market, by the way, just calls our attention once again because we're very close to the morning lows. Not quite there yet, but I think on the Bank Nifty, we are very close. In fact, it will be perhaps the index that might go to the lows first. Actually, it's done that, intraday lows on the Bank Nifty. On the Nifty, we're still protecting that because of a couple of stocks. Infosys in particular has been strong. In fact, the entire tech sector has been trying to sort of battle the bears. Maybe it's the currency trade which has played out over the last couple of days. The rupee has made a very swift move towards 82, so that maybe is helping. Okay, before we thank you, Prakash, I just wanted your thoughts on what's happening to Hindalco in particular. Down 18% this month, and from the highs, it's almost halved.
Anuj, unfortunately, I have an open position on this stock, and I would be able to answer you on this right now.
Short or long?
so that says a lot, yeah. So
yes.
Yeah, but yes, that'd be unfair to add to the pressure.
I understand. I mean, good for you made the disclaimer. Okay, so why don't you leave us with your thoughts on ITC? Hoping no open positions there.
No, so that's anyways a long-term bet. So and I continue to believe that what's happening in terms of the changes in raw material costs, ITC is something that will benefit. It's just that the market sell-off itself is hitting all these high market cap stocks or weighted stocks. But I would believe any dip on ITC is it's a great opportunity for people who have missed out on it, because there are a lot of people who seem to have missed out on it in the recent past.
Okay, all right. Prakash, we'll leave it there. Thank you very much for your time. Great speaking with you. Appreciate you coming on the program today. Well, we have Nilotpal Sahai, Head of Equities and Fund Manager at HSBC Global Asset Management, who is joining us to take some questions. Nilotpal, great to have you with us here. Thank you very much. So things seem to be, the globe seems to be catching up, or we seem to be catching up with the globe in terms of what's been going on. What is your assessment? The general consensus now seems to be that if there is significant pressure for global equities, the markets here also perhaps will react, cannot remain completely insulated, but relatively speaking to the rest of the world, and that matters little for the viewer watching this because they only invest in India, there will be relative outperformance. For fund managers and the like, you can kind of point out and say, well, relatively we're doing better, but there will be pressure here in absolute sense. Would you agree with that assessment?
Good afternoon to your viewers. Yes, absolutely. What you mentioned in the question is exactly what we are thinking and doing at this point of time. While the key driver for the market right now is the actions being taken by the Fed and other central banks, and the impact is felt not only in their market but all other markets. So India cannot be decoupled from that. In fact, the first order impact would be that of the tightening liquid situation, and as well as because the interest rate differential is also narrowing. So that also means that our attractiveness to attract the foreign currencies also goes down. And so that will have negative impact on the market in the short term and create the volatility that you talked about. But you also mentioned about the relative performance, and this is very crucial and critical as compared to the rest of the market. And the key difference which is there for our market with respect to other markets, and as well as our market with respect to our own history, is the strength of our balance sheet for all the three arms of the economy, be it government, be it corporate sector, or be it household. So all the three are in a better position, a stronger balance sheet than what we would have entered into a crisis-like situation in the past, or as compared to other economies. And that is why we are in a much stronger position to withstand this the forex or the from the outside India related concern that we have got. And also not to forget one more thing is that the corporate sector earnings growth has been robust in the last couple of years. Even in the quarter gone by, there was a hiccup, but a small hiccup as such. And one is hoping and expecting that it does not continue beyond 1 or 2 quarters. And again, we get back into the robust earnings growth trajectory. So those are the two factors: the stronger balance sheet for both government, corporate, and the household, and the relative corporate earnings growth actually makes our market in a much stronger and a better footing as compared to the rest.
Right. Hi, Mr. Sai. Good speaking to you. Mr. Sai, we're going to be going into a phase where we get some consolidation at best, maybe get a bit of a drawdown as well. If that seems to be the case, and if India is going to be, doing better than what the globe is going to be doing, how do you approach the domestic themes? Are you looking to add into maybe, the industrial theme, consumption stocks? I think discretionary in the past you were fairly positive as well on. Tell us, how do you approach the market? Which sectors would you be looking to add into?
Yeah, so because our prognosis is that there would be near-term volatility, but hopefully things will ease out after that. So the best way to look at from the portfolio construction point of view is to look beyond this near-term period and look from the 3 to 5 year, that is medium to longer-term perspective. And there we see 2 to 3 mega trends playing out. One of them is obviously financial, which is our longest-standing positive bet, which has benefited on account of significant improvement in the credit cost. In fact, the best that we have seen in the last 10 years. And recently, even the credit growth has also picked up. So that particular sector is doing pretty well, especially the lending finance business. But I also want to bring in a new mega trend which is playing out, and is manufacturing sector, which has seen sort of big revival in the last, as compared to the last 2-3 years. The utilization levels of the manufacturing sector has gone up. The order books are strong. There are many more destinations in the country where the investment is taking place. The incentive schemes has worked out well for a few sectors. And we also see import substitution happening. Earlier, the buzzword was only China +1, but now one can also add Europe +1 to this thesis, especially given that the high energy costs that we are seeing in the Europe might mean that some of the manufacturing in Europe might be unviable at this point of time. So given this thought process, the way we are looking at the portfolio is to be overweight on these 2 mega trends. And of course, consumer discretionary is one of the sectors that you already pointed out. But apart from that, also domestic material companies. Now it could be chemicals, it could be cement, also selectively in the industrial basket also is that what we are positive on.
Nirajpal, good afternoon. You referred to financials. Financials is a large basket, right? So which part of financials? Because the leadership has been with the corporate banks, SBI and ICICI Bank.
Yeah.
The erstwhile outperformers like HDFC Group, that struggled. And of course, there's NBFCs as well. So which part of financials are you going with?
Okay, the shorter answer is that you already mentioned, plus some other large private banks that we are more positive on. But now the key stock selection would not be based on the ability to grow faster, but the ability to raise liability faster. Because now we are seeing a decent differential between the credit growth and the deposit growth for most of these banks. So the banks which has got a granular liability franchise, those who have made investment into digital infrastructure and to be able to raise, and those who are expanding their branch network, is where that makes us more positive on. So within the lending financials, we do believe that the large private banks, top 3-4 of them, and a couple of, again, large PSU banks also, which have got a strong distribution and also strong digital infrastructure is where we are more positive on. Incidentally, all these banks also have got high CASA deposit, and that also means that the liability franchise is quite granular, and that means that would not be shifting their source of the places that they would be investing in. So the liability franchise of these banks remains intact. So basically the top 5-6 banks that we are more positive on.
Sorry, one of the themes you said is manufacturing, right? Which areas?
So selectively material, some part of consumer discretionary, and again selectively into industrials.
Okay.
Materials, specifically that of the domestic materials like housing, real estate related, cement, and chemicals, and not so much into the global cyclicals. We are not so positive.
So all three local focused, supplying to the domestic market, not very much.
Absolutely.
Not export focused at all.
No, not global cyclicals. We are not so positive on that. They have seen recent jump up in their earnings on account of the higher energy and commodity prices, but we think that is due for a mean reversal, and that does not make us positive on a medium to longer term perspective on some of these global cyclicals.
When you say building materials, you mean only cement, mostly cement?
Cement and other, there are names in the mid caps and small caps, basically the ancillary sector, the tile companies, the pipe companies, the paint companies, and the likes.
You had some small exposures to some mid-cap IT as well in the past. Those stocks have corrected big time. They need to still correct more before it can make you interested again? Or do you think you should start chipping into a couple of them?
Yeah, so our view on technology is relatively more positive as compared to how the market has treated them in the last 6 odd months or so, actually. That is because we believe that their underlying business continues to remain strong. The recent management commentary has also remained quite strong, but the worry seems to be emanating from what could happen next year. Now, given that view, and if that view was to materialize, then the better bet at this point of time would be the larger size IT companies, and not so much the smaller size IT companies. The time for the smaller size IT companies will come when there are tailwinds behind in the sector. As of now, there is a chances of the headwind in the sector, so the preference would lie with the larger names in the IT sector right now.
All right, Mr. Sai, always good speaking to you. Thanks so much for stopping in and giving us your view on the markets. By the way, we're back below that 16,900 odd mark, so it's looking a little bit iffy. You know, if you bought at the high point of the day, you'd be losing a lot of money. Buying the dip seems to be a better strategy rather than chasing when we get any kind of follow through. Time to slip into a short break. Come back. Well, Nimesh will be joining us. He'll give us a better insight into dealing rooms, and as always, our technical experts as well will be back with us.
Welcome back. The market's been quite weak and been talking about it for some time now, and a lot of stocks are under selling pressure, but it's clearly the financials which stand out. But the last bit of decline on the Nifty is courtesy Reliance. Just pull out the intraday chart on Reliance and you would notice that that's making a move lower. So whether that now takes the Nifty to the lows, we find out. The Bank Nifty is at lows of the day, and of course a lot of stocks under pressure on the Bank Nifty. The ones which stand out though on the upside though are Asian Paints and Hindustan Unilever. So clearly a bit of a defensive nature, and the fact that crude oil prices, palm oil prices, all of these are coming off is helping on margins. So both these names, Lever and Asian Paints, right now when the market is at days low, these stocks are at days high. Let's ask Nimesh what he has picked up from D Street Chatter or from the dealing rooms. Nimesh, hi, good afternoon.
Hi, afternoon, Anuj. So, again, the feedback is there's huge volatility, and that was expected as well because of the expiry this week. Again, a day when there is massive selling in the financial names, so that's the big sector which is dragging the Nifty down. On the other side, a bit of defensive buying. So, IT, pharma, and FMCG, these are the three sectors which are well bid by the large institutions. So, it's going to be a mixed day in terms of FI flows, though on the negative side. But the relentless selling in the financials is matched by some bit of defensive buying. Again, tomorrow will be a big day in terms of the RBI policy. That will be closely monitored, and that will have an impact on the financial names as well. Technically, the feedback is on the downside. The next level to watch is 16,640. That's a crucial support level for the Nifty. If that's taken out, then probably we'll see a big sell-off. But I guess till then, there is a feedback that maybe that's one support level which will the bulls will like to defend on. So that's on the technical side. Overall, again on a weekday, huge volatility. But the feedback is while the selling in financials continue, a bit of defensive is what matching up in terms of buying in the likes of IT, technology and FMCG stocks.
All right, noted the support level 16,640. Nimesh, closer to around the 100 EMA on the Nifty 16,700. But what about individual stocks? What are you picking up?
Hi Nigel, so the first stock is Axis Bank. A lot of chatter since the large block deal of close to 0.5% equity changing hands. But the overall feedback is it's largely a trade between FI to FI, so not much to read into today's Axis Bank block deal. So that's the first one. Second stock is Dr. Lal Path Labs. Interestingly, this stock this week has relatively outperformed the markets and the peers as well. It's up in today's trade as well. But the feedback is there's going to be a large block deal very soon. A leading private equity investor is looking to sell a large chunk, so could be some bit of pressure going forward. Interestingly, for next series and for the November series, the stock is selling at a deep discount to the current price, so that's something to watch out. The third stock is Indiabull Real Estate. Again, some bit of buying is back in this particular stock from larger HNIs is what I understand. For Indiabull Real Estate, the big trigger is going to be the next NCLT hearing on October 7th. If that's get cleared, the merger will go through, and hence a bit of buying is back in this particular stock in today's trade. And the last stock is Asian Paints. Anuj also spoke about it. Of course, it benefits from lower crude prices, but the recent outperformance in the last few days is largely because of buying interest. Looks like some of the long only funds seems to be accumulating, and hence a bit of outmove in Asian Paints today.
Okay, Nimesh, thanks a lot for that. Financials are really taking a bit of a knock right now, and this is not the kind of a market in which contra trades are working. It's absolutely slam dunk. Every time the market's giving you recovery, selling is working. I mean, the post-noon, easier said than done, I know, of course, but there's been a very sharp knock that you've seen on the Bank Nifty, almost approaching a 600-point downtick now on that one. Let's ask Mitesh whether there's more downside. Mitesh, it's looking quite weak on the Bank Nifty. In fact, we are now approaching what, almost a 10% fall from the highs, almost there, right? From the peak, 9.7. How do you see this, and what would be your BTST calls?
Well, I think the Bank Nifty, made a fresh high and then immediately broke below that. Typically, that's not a good setup, and then we also had a weekly gap. Just looking at the chartical picture over here, I think getting past 39,350 in the medium term, 39,500, 39,350 zone will be very difficult for the Bank Nifty. And I think eventually the Bank Nifty could turn weaker and possibly even head towards 36,000, 36,250 zone. So I think that's the area where longer term supports kick in. It could actually go down to that, and that's looking like a slightly higher probability event. And therefore, I think rallies to about 39,000 should be good selling opportunities. And on the BTST call side, HUL is a BTST. I think that's a stock which clearly is breaking on the upside, sustaining as well in this weak market. So I would recommend a BTST with a stop at about levels of 2680 over here, and a target of around 2730, 35 for tomorrow. And in case you get a positive SGX, I think this could lead the rally on the upside. So 2730, 35 could be looked at. The other stock is Indus Tower, which is closing towards the low of the day. In fact, it's slipped a bit more in the last few minutes, but keep a stop at about 185 half here and look for a 179, 178 kind of a target.
Okay. All right, Mitesh, thanks a lot for that. Market expert Anand Tandon joins in. Hi, Anand. What a move you have seen, particularly on the Nifty Bank. Just a few days ago, we were celebrating a fresh 52-week high on that one, and it's pulled back closer on 10%. Now, if that financial institution, investment theory that was going around, the consensus buy on all banking names, then you're getting some of these stocks much cheaper. Do you believe that it's a good time to get into some of them? If yes, what would you be looking to buy?
I don't think much has changed in terms of the thesis. What has changed is obviously that the market has begun to realize that there will be a recession globally, and that the US, for example, is not going to be in a hurry. The US Fed is not going to be in a hurry to cut back interest rates, and that means that you are looking at all risk assets being finally risky, and to that extent, all equity markets are now pricing downwards. Obviously, because of the fact that most people are overweight financials, it will mean that when you are trying to sell off, you will get the biggest impact there. Does it change the underlying thesis? I think the underlying thesis remains that credit growth in India has finally picked up. bank balance sheets are generally in good shape, and the increase between the credit growth versus the liability growth has now moved in the favor of credit growth. Consequently, you will see interest rates going up both for the lender and the borrower, and therefore, as investors, you will benefit from higher interest rates from banks. The spreads of banks will therefore sustain, and by and large, in an otherwise bleak market, you may find that this is the place where your earnings growth will continue to come through. None of that has changed. The only question is valuations will move with the market. If you really believe that the story is what you think, what I've just outlined, a lower level is a better place to enter.
Although there is another aspect to this, right, which is growth here as well. So because if rates have to go, like for example, we had Sanjeev Prasad with us earlier of Kotak, who said, the RBI has no option but to sound and do hawkish things, even if it doesn't want to, even if its mandate of controlling local inflation is well met. Because of what is happening, they'll have to be quite hawkish this Friday and maybe beyond as well. That has growth implications as well down the line. Anand, any thoughts?
So first of all, it is very strange that earlier I used to argue that RBI was not cutting rates fast enough because while inflation was falling, because there was some focus on future inflation. I think the best that RBI can do is just look at the inflation number and move accordingly. They have been well behind the curve, right? Inflation has been above their required band for more than a year, and they haven't moved it up fast enough. There is no mandate that the MPC has for growth. Please read the act itself. The act is very clear. The target of the MPC is inflation, period. If inflation is above 6%, you are not doing your job, full stop. You are not doing your job. Your interest rate should have been way higher. It is not the problem of RBI to worry about growth. It is not the problem of MPC to worry about growth. That is the government's problem. Let them worry about it. We are behind the curve. Interest rates have to go up. I don't think there are two ways about it.
No, that is well and fine. But by your definition, the job has not been done for over a year now, right?
Absolutely.
So
that is why the market is where it is. Otherwise, the market should have fallen up much faster, much earlier.
So now that because of external pressures, if the job is done, then growth should be repriced lower, which is what your case is.
So I'm not arguing for a moment that the market is well priced. All I'm arguing is that, see, I am a strong believer of asset allocation. Is there a time when you should be increasing equity allocation? Absolutely not. In fact, I would argue that for the next 2 years, you may make better returns on debt than equity. Now that said, you're not going to be either fully debt or fully equity. So what do you do in equities? Within equities, the sectors that have the highest level of growth or the highest probability of being able to show sustained growth is the banking sector. So whatever is your equity exposure, if you have to try and manage that, you should be actually overweight financial. That doesn't go away. Should you be going out there and buying now? That's a tactical decision that is for someone who's looking to deploy money to take. It's not something that you would, as a strategist, you would not be arguing about this is the particular point of time. That's the difference between being a technical and a fundamental analyst, right? I can advise on asset allocation, not on the particular time and level at which you should be buying.
Fair enough. Anand, hi, good afternoon. So, are you buying Ambuja cement now in this correction?
I'm not a great believer of buying cement, period. I think if you have to buy cement right now, you should be looking at those things which are, likely to get taken over if the fight becomes ugly. And therefore, you might want to buy smaller ones. From a portfolio allocation point of view, cement is actually a very small part of the overall index, right? It's less than 5%, or just about maybe that in that range. And therefore, if you have to take a placeholder kind of thing, you buy, perhaps the larger ones. You buy a Dalmia Bharat or you buy an Ultratech and just stick with it. If you are looking to try and get an alpha out of it, you buy the small companies which have a greater possibility of taking over. The aggressive fellows who are going to put out big money to try and do acquisitions are not necessarily the ones that will give you the best shareholder returns in the near term.
Market's in some kind of a free fall now. The Nifty is now down 165 points and the Bank Nifty is now down 630 points. Just look at the intraday chart of State Bank of India. This, remember, was the go-to stock. Every time there was a dip, small or big, this was the one which everyone was latching onto. There was a lot of FI inflow into some of these names. Just look at that. That's a bit of a free fall. So, in line with the bank Nifty, it's fallen about 10%. Now, is this an indication of people throwing in the towel, even in the stronger stocks, relatively stronger stocks? Anand, SBI, would you use this dip to buy?
So if you are looking to put fresh money, absolutely. I think it remains one of the best franchises that you have. As the speaker before me mentioned, the gentleman you had before, you will be looking for strong liability franchises. So other than the frontline private sector companies, the best franchises among the public sector will be companies like SBI. And given the fact that our credit and deposit rates are now significantly different, you would need that extra money to be able to grow. SBI has that. The subsidiary valuations for SBIs are also fairly attractive. So on an overall price to book basis, it's not particularly expensive. So yes, you would buy it. Whether you buy it now or not is a matter of the overall market. I still believe that it will be an outperformer over medium term.
Okay, all right, Anand. Well, just stay on. For the time being, we'll slip into a short break. We come back. Final few minutes of markets. We're moving back towards the low point of the day. Well, market's going to be ending closer to the lower range of the day. If you bought the dip, you'd be happy. But if you celebrated too soon, then it's not been a great trading session for you. Mitesh, before we wind down, your view on the index, we're going to be closing closer to around that 16,820. Well, 18,000 seems a long way away. Your take, Mitesh.
Yeah. So I think, my only thing and the possible source of optimism is that 16,750 is the support area, and we are also, getting oversold. So I think tomorrow morning, in case we see a gap down around 16,750, 16,800 zone, and then we see a reversal, that would be a stronger one than what we have seen in the last 2-3 days on an intraday basis. That could be possibly a few days of reversal. But yes, I think on the upside, you will see again supply coming closer to about 17,200. So looking for some consolidation once we hit 16,750.
Okay, fair enough. Mitesh, thanks a lot for joining us. Anand, will thank you as well on that note today. Thanks a lot for joining us. Have a good evening. We'll start wrapping up the market action then for the day. And, let's look at the rates. The Nifty is ending, the sharp leg down, 174 points down on the Nifty. The averaging would mean that we would still close slightly above 16,850. But for all practical purposes, the close is below 16,850 on the bank Nifty as well. 37,663 is where we are closing. That's a good 2% downtake on the bank Nifty. Classical risk of trade where financials underperformed, healthcare, FMCG and IT outperformed. So big names like ICICI Bank, the HDFC twins, HDFC Bank and HDFC, State Bank of India, Axis, all these stocks were down. Metal stocks were down, JSW Steel and Hindalco, Tata Steel as well. Reliance saw big pressure today, 3% down on Reliance. So that's on the downside. On the upside, as I said, classical defensive play. So Asian Paints was up 3%, Sun Pharma was up 2.5%, Dr. Reddy's was up close to 2%, Nestle, Hindustan Unilever, Tech Mahindra, a couple of IT names here or there, they did well. But the broader market, Prashant?
Came under pressure, severe pressure. Just put up Z, if you will. What a turnaround, on Z. From the high today, it lost 15 rupees. 254 ends at the lowest point of the day today. But 2:1 in terms of declines to advances otherwise. Motherson was down 4.5%. Punjab National Bank was down 5%. The new listing that was down 4%. Harsha Engineering, I think, 4.25%. Chambal Fertilizer down 4.75%. HCC lost 7%. Raymond was down 5%. We had BF Utilities down 4%. PNB Housing was down 4%. Saxoft was down 8.5%. Gati was down 4.5%. Advanced Enzymes was down 4.5%. Bharat Gears down 4.5%. And many more. Philatex was down 6%. We had the management with us earlier in the morning. Canfin Homes was the other one. We started the show with that. That ended marginally in the green, off the highs by quite a bit. Actually almost flat, almost in the red in trade. About 0.5% higher. Niger.
Well, it's a poor close actually to the trading session. When we start off closer around the 16,800, you bounce back 250 points odd, and you end closer to the lower range. Well, that's not a great sign at all. The Nifty Bank, by the way, on September 15th, we made a fresh 52-week high. From there, it's corrected a good 10%. Advance decline ratio as well is quite telling because you had two stocks that were declining for just one stock that was advancing. Though in relative terms, the mid-cap index, well, it outperformed the frontline index because that was down close to around 0.4% or thereabouts. All in all, a weak trading session. The bears, well, they'll be feeling good. Those bounces are getting sold into. It appears it's a matter of time before we get a bit of a bounce. But when will that happen? Well, that's going to be a crucial factor as well. For the time being, we'll wrap up on this edition of Closing Bell. But up next, Mad About Markets. You stay with us.